Well, thank you so much for joining us. I'm Marlon Bowling with you. I hope you're having a terrific Monday, at least the start of it anyway. Glad you could join us here today. I am joined by the one and only Brian Hoops of Midwest Market Solutions. He is in Springfield, Missouri. And Brian, I'm glad you could join us here today as we look back on the market action overnight. We had, well, Tammy talked about it. Let me bring up the corn market here and the overnight trade so we can kind of take a look at this. It was an interesting development. Of course, everybody was kind of focused on the rainfall that occurred over the weekend. And it was one of those shotgun approaches where some people got a lot of rain, some people missed out. In some cases, they were right next to each other. But it was just one of those deals, the typical summertime pattern. And overnight, we ended up with the corn market on September going down 1.5 pennies at 5.83 1/4. But it had a fairly wide range. That range was actually about 19 cents wide. And we closed kind of in the middle of it. Now, December was down 1/2 cent at 5.87 1/2. Now, let's take a look at the soybean trade. And overnight, well, we had the August contract up 11 at 14.15. And we have the November new crop up 11 this morning at 13.21. Off of its overnight high of 13.26 1/4. So it came off of its overnight high by a little bit, but still pretty strong. On the wheat, now here in Chicago, you had the September contract 14.5 cents higher at 7.61. That was kind of interesting, but off of its overnight high by 9 cents. So it gave back a little bit of ground. In Kansas City wheat, here you had September 14 higher at 8.75 3/4. And Minneapolis wheat, we had September going up 11.5 cents at 8.85 1/4. Strength in the wheat. Brian, why?
Good morning, Marlon. Yeah, so wheat market trying to move higher. There's some unrest in Russia over the weekend. A private mercenary type group tried to overthrow parts of the Russian capital as well as Putin, and were quickly turned away. And so there was concern that maybe Russia would not be able to export as much grain because of this unrest as what was originally thought. Now, I don't know if that's going to make a difference really to U.S. wheat. We're not very competitively priced, and moving higher is not going to help us out. But it is enough for the market to move higher here on. Most of that volume in the corn, soybean markets was right on the opening. That's where we created that range of about 20 cents was within the first 30 minutes of trade. Opened sharply higher. In fact, the highs of the night sold off. And then as the evening wore on, kind of slowed down the volume and started to rally till back to where we closed the overnight market. So it's been an interesting morning from my perspective. You get clients calling in, and if they're south of I-80, which runs about from Omaha across the state of Iowa to Des Moines into Illinois, if you're south of I-80, boy, your crops are really suffering. You didn't get any rain over the weekend. Things are really hurting. And if you're north of that, you had some really good rains that helped stabilize the crop. And you're probably a little bit more bearish this morning because of those rainfall and how your crops have reacted to it.
Now, what do you say to the folks that have the comment that, well, every year somebody always has a drought somewhere in some part of the country? It's a big country. And I mean, somewhere there's always a dry spell. So what do you say to that?
Yeah, and that is true, but you also have to look at where these dry spots are occurring. Now, this year, it's been across Iowa, across Illinois, Indiana. Iowa and Illinois are your number one, number two corn, soybean producing states in the entire nation. That's not where you want to have a drought if you're going to have big supply type markets. Now, you can have droughts in parts of, smaller producing states such as, maybe Kansas or Missouri that aren't the top tier of the corn and soybean producing states. That'll drag down your yield just slightly. But when you're talking about Iowa and Illinois, that's really going to bring your yield down. Last week's crop ratings, we saw big drops in both those states, about 14% in the good to excellent category. Probably going to see drops again this week, maybe not to that extreme, but Illinois largely missing out, especially southern Illinois missing out on these rains, Indiana, and even southern Iowa missing out on a lot of the rains. So it's been hit or miss for the year, and that continues. So that's why we saw the market trying to recover, I think, a little bit overnight, trying to judge and ascertain how effective these rains are going to be and what this week is going to look like. It's certainly going to be much warmer, probably the hottest week of the year so far. We're going to be in the 100 degrees, so there's crops around here that will certainly be suffering because we have not had that rainfall.
Yeah, there's no doubt about that. That is absolutely sure. Okay, we'll come back in a moment and we'll discuss the setup for our livestock trade. We had some numbers that came out late last week. We'll discuss that too when we come back. All right, now we're back with Brian Hoops, and we're going to talk about the livestock side. After we closed up last week, Brian, we had the cattle on feed report that came out from USDA, and had a little bit of a surprise in there. If we look at those numbers, we had the on-feed number as of June 1st coming in at 97%, pretty close to expectations, but that placements number pretty high, 105% of a year ago. Trade was only looking for 102.2. Now that marketing's number was pretty close to the average trade guess as well. So with the placement number that high, do you think that'll have any impact today on the trade?
I think it will. We had rallied going into that report, especially those deferred contracts, and that's what's going to be hurt by these bigger placements. So October, December, February all have big premiums built into it and did rally into the report. I think they give back a large share of those gains. So it's certainly a negative for the cattle industry. Now, the positive here is those on-feed numbers remain tight. In fact, this is the smallest number in 5 years. So look for some spread trade to take place once again. August is already discount to the cash markets, and we had a big kill week last week, 549,000 head killed. That's the largest since January, and that shows that the packers have a need and appetite for some cattle. So I don't know that we're going to see sharply lower cash trade, maybe more of a steady market as they try and use early weakness to their advantage. But I do think you're going to see August find some buying interest as we go into the trading session because of those tight numbers and maybe expectations that if we put together another big kill week, the packers are going to have to pay up, and that'll support the August contract.
But a big argument for the other side, Brian, is the cold storage report that came out at the same time as the cattle on feed numbers. And wow, if you look at the frozen beef exports, or I'm sorry, not exports, but the inventories last week, we had the frozen beef down 6% from a month ago, and you had it down 20% from a year ago. That was a big decline. Is that going to offset the placement number?
Yeah, I think it tells us that we're pulling more beef and to a lesser extent pork out of these coolers, and we're going to need to rebuild that inventory sooner probably rather than later. So I think it really kind of supports the case that demand has been pretty decent. Maybe exports are starting to slow, but our domestic demand has remained strong, and we need to restock those coolers, and we do that by killing cattle, and our slaughter pace is significantly less than a year ago. And so that's another explanation that why our coolers are smaller is because we're just not killing as many cattle right now. Remember,
August live cattle closed 37 lower ahead of that release of the reports Friday. The August feeders were up 327 at 233.95, and as Brian mentioned, that could be subject to some backing and filling. And August lean hogs closed 30 higher Friday, but the deferreds were a little higher. The August was lower, by 30 cents. All right, Brian, thanks for all the help this morning. Brian Hoops, Midwest Market Solutions.